Hi guys, welcome to a new week. Charts moving. Let's do this on silver. We start on the weekly. We can see that price is still on the $24 level of supply and demand. It's just hovering over it. You can see that the previous weeks have been weakening down. There's a lot of price pushing down and back up. You can see all these weeks to the downside. Also starting from here, so there's a lot of bullish pressure and there's imbalance to the upside. So on the weekly, I'd be looking to target the $25.5 price point because that's where there's an imbalance on the daily and is also supported by this 25.2 weekly supply and demand level, and also this weekly structure. This is a weekly structure low and this is a week high, so that's where I expect price to push up to on the weekly. On the daily, you can see price is still in this daily consolidation area over here. So price coming down, almost took out this sell side liquidity, but it just came near it and rejected to the upside. But given that daily structure is still maintained bullish, I'd expect for price to keep trading higher because these are the weekly levels. No, I mean daily levels of structure. So price is still bullish on this time frame. It's consolidating on the others because it's having a hard time breaking through this $24 level. However, something with zones, if it has many touches, that means there's a higher probability of it breaking rather than it being rejected. If we go to the 4-hour, we can see that the structure levels are where structure on the 4-hour now is bearish because, as we can see here, the levels, here's the lower high, this is the current lower low, previous lower high. Price traded above here but didn't trade higher than this previous high. It came down and it didn't break structure here by taking out this outside liquidity. So it's a bit tricky. That's why price, when it's ranging, it's, let's say, a bit challenging to accurately have a bias because price is moving both up and down, sequentially. But then let's continue. We can see on this time frame, price has come to this level and is rejecting with the current 4-hour candlestick. We can see that it's coinciding with our previous week's analysis where I was looking to short this market. It came, pushed back, filled this imbalance and came to this 24 level of supply and demand. However, given the higher time frame market overview, it doesn't seem like price will drop from where it is now because on the daily structure is bullish, on the weekly structure is bullish now. When I would look to sell is if price breaks structure on the higher time frame, such as the 4-hour or the hourly. If we go to the hourly, you can see that on the hourly there was a change of character here. There was a break of structure as price traded below here, but then it came and broke again here because you can see it traded lower, came up higher, then traded lower and broke structure here. So this is a change of character here. after which came, traded higher, traced, had another expansion to the upside, so you can say this is fully filled, had another expansion to the upside, and is now retracing. One thing to note is that this high here is a weak high, so this is a level of buy side liquidity where price has a high probability of traveling to. And since the hourly structure has been maintained as bullish, I'm more inclined to buy. Even though we're in a consolidation, this target is not outside of the consolidation, it's just this high. This may or may not get taken out because you can see price traded below here, left it by a very small pip amount, and then add an expansion to the upside. So I'm more inclined to buy this market. If we go to the 15, look at our Asian range. Yeah, this is our Asian range. It's more of a consolidating one. So let's do this. Okay, that's our Asian range. On the 15 minutes, the levels of structure are these ones. Here, here, and here. So in this time frame, price is still bullish. If I were to switch biases, price would have to trade below this low here, which is also the previous day's low. So I'm more inclined to buy this market. If we draw fibs, you can see that this fib levels coincide with this level of sell side liquidity here. This equal lows where I see price traveling to before it gets adequate volume to trade higher to reach our targets, which are the 24.35 price point, which is our level of buy side liquidity on the 4-hour. So this level of sell side liquidity coincides with 50 to 61.8% of the fibs. Also is supported by this level of supply and demand, which has managed to trade above. Although, has it closed above? Let's see. Yeah, managed to trade and close above this level of supply and demand. And the lower time frames are confirming that price is really in a bullish move. So I'd expect price to trade below this low here, take out this sell side liquidity, and then expand to the upside. That's my analysis on silver. If you'd like to be a fund manager with FTMO, check out the links in the description for an awesome discount. Let's go. On gold, if we start on the weekly, you can see that price is really bullish. There's a lot of bullish pressure even given from these previous weeks. It was struggling to trade above the 1950 level of supply and demand, but it has managed to trade and close above this level over here. You can see that this imbalance has been filled halfway and is yet to be completely filled. On the daily, we can see that price came, retraced to this level here, had a big expansion to the upside, and broke structure, or continued the bullish structure. So price is very bullish, it's heavily bullish. Let's go down to the 4-hour. On the 4-hour, you can see that our structure points have changed. We move it here, here, and here. These are 4-hour structure points. You can also see that on this time frame, we have some imbalance to the downside. So on this time frame, we can clearly see that price is bullish because it's forming higher highs and higher lows. Check out our fibs. You can see that the area of imbalance here coincides with the fib levels, given that it's below this low, but coincides with the fib levels and this 1915 level of supply and demand. So this is the area of highest probability of price coming to and then bouncing off of to come and fill this imbalance to the upside. It's just a bit, but it's significant because you can see here it formed a high and here it formed a weak high. No, a weak low here because this low is not able to trade above this previous high. So I'd expect price to trade below this low here, take out this sell side liquidity, which is also the previous day's low, which is an area of liquidity, then trade higher to 1940 to fill this imbalance. Last week it went a long way, reached half of it, 1935, which was our targets for last week. Now it's 1940, and yeah, the rest will know as price continues forming. Let's look at the hourly. We can see that here price formed a sort of consolidation here. It's been in this range for a while. Okay, since Friday it's been ranging. So what I'd expect is price to trade lower to take out all of this liquidity below this consolidation zone, and also trade below this low, which is a weak low, take out the sell side liquidity before price has adequate volume to trade higher. Okay, so I'm expecting a deep retracement on gold, then an expansion to the upside. Now let's check out our Asian range on the 15 minutes. So this is the midpoint. So we can see that this is the Asian range midpoint. So what may happen is price trading below here, carving, retracing back to this level, and then having a deeper retracement to take out this sell side liquidity and to fill out this imbalance at least halfway, which also coincides with the 1950 level of supply and demand, so that it gets adequate volume to trade higher to 1940 at least. So that's my analysis on silver and gold today. Hope you all have a good trading week. Watch the charts with me. Peace.